Welcome to episode 13 on the Property Prescription with Tony and Phil.
Lucky 13.
How are you, Tony?
Yeah, good. It's we've done well. It's quite a few episodes down already.
We've made it this far.
Yeah, I'm happy about that. How are you going?
Yeah, I'm pretty good. Running to events across the country and doing a few talks. So it's good. We're getting towards the end of the year. So it'll be good to have a break.
Yeah, me too. Been to Darwin recently? Have you going around the country?
We have. We've been to Darwin a few times lately. So be a good topic to talk about today.
I've actually never been to Darwin. I've got some friends there who always tells me to go.
Yeah.
But definitely not this time of the year, I think. I think it's supposed to go in winter time, so the weather is actually better up there.
It's quite seasonal.
Yeah. So I'm going to try and go in winter next year to catch up with some friends. But I know you've got some ideas about Darwin and some data about Darwin. I'd love to hear about what you think the real estate market is going to do.
We actually caught up with the doctor in Sydney a few weeks ago. We did a talk for a medical group, lending group there, and a builder. And one of the doctors asked me a question about Darwin, and Darwin's a market that we've taken a position on just recently as a business. Talking about Darwin, it's quite seasonal. It's been very, very much a transient market where you had a lot of fly in, fly out type people living in Darwin, working in the mining sector. Darwin's got a population of just under 140,000 people at the moment, and the population growth rate's growing by about 0.86%. So we're really starting to see the Darwin market moving from where it was, say, 10 to 12 years ago. And we've seen some uplift in if you look at sort of the data sets for housing, over 10 years, the housing market's only grown by 1.1%. So if you purchased a house 10 years ago, you would have generated very little growth. And units are actually negative 1%. So we haven't seen a lot of growth in the unit sector. But what we've seen is less stocks being built, and the rents have just slowly just gone up and up and up. So for a house, an average house is generating a rental of around $740 a week. And if you've got a unit's renting for about $550 to $600 a week. So if you've got a 2-bedroom unit in Darwin, you can pick those Darwin units up for around that $500 to $600,000. So for the first time in a long time, it's actually starting to show value. And there's a number of different triggers for that sort of value proposition. There's just lack of stock. We've seen the largest infrastructure spend per person, which is running just over $11,000. So it's actually quite, in terms of the amount of investment going into Darwin, we're seeing a real change there. But the yields in Darwin are fantastic. So if you're a young doctor and you're looking at a trading asset, and you don't have the ability to buy in Melbourne or Adelaide as your first home and you're rent investing, I think Darwin's a really good area to consider for 6 to 9 years and then trade it.
So at that rent that you mentioned, what percentage of yield are we roughly looking at here?
So yields for houses and units are above 6%.
Okay.
So by the time you factor in your running costs, your gross yield's 6, your net yield's probably 3.5% to 4%. You still got to pay for your insurances, your interest repayments on it. So the yields are actually a lot stronger than they are in, say, Adelaide. They're stronger than the yields that we're seeing in Brisbane. So, for the first time in nearly 10 years, it's probably the cheapest that we've seen it on the cycle.
And what is your, say, 5-10 year projection on this?
Yeah, well, as I said, within any trading market across the country, we need to see at least 60% growth in order for us to trade that property, hold it for 6 to 9 years and then move it on, or upgrade to a better quality sort of residential or commercial investment. So it's a sort of 6 to 9 year hold. I'd hold it for that period, wait until it grows by at least that. If it happens in a shorter time frame, great, just move it on. And we'd like to think we can achieve that in a smaller time frame if we can, but we're pretty conservative. 6 to 9 years is sort of our trading play that we tell our doctors to hold it for that period. It might not grow in year 2 or year 3, but give it the time that it needs to mature. And that's part of you've got to hold on to them, for that period and let them do their thing.
Darwin's already been going up in 2025, hasn't it?
We've seen
definitely on the way up.
Yeah, well, as I said, there's only 569 properties on the market available. So there's very little stock available. So to buy really good quality stock is quite difficult for us. And we've got a local team on the ground doing the buying and doing the renting. in our previous episode that Alicia's working through in terms of making sure we're getting the right type of tenants. We're buying blocks of units up there as well in that sort of $1 to $2 million price point, and they're great value. You can buy a block of 6 or a block of 8 for $1.5 million and get a great yield on them versus a house in Melbourne so it gives you, when we're looking at a doctor's portfolio, it gives them a different allocation across, and we're very national based when it comes to investing. So average days on market, we're sitting at around about, it was kind of 65 days sort of 12 months ago. It's slowly coming down to 55, 50 days. So when you see days on market going down to around 25, 30, stock's moving. Assets are selling at a good price.
So you've been to Darwin a few times already.
Have.
Okay.
Yes.
What is it like? I've never been. What is it like to live or visit? What's the vibe there?
Well, we've got a lot of doctors moving from Perth into Darwin at the moment, and there's probably 3 or 4 really good quality AAA rated suburbs, areas like Nightcliff, which, predominantly close to the water. So a lot of our doctors working at the hospital want to be positioned in 2 or 3 suburbs. So there's some sort of lower value suburbs that I'd probably stay away from, where the crime rate's probably a little bit too high for us to consider buying in those particular areas. But the 2 to 3 suburbs that I would stay in, the livability and the lifestyle's fantastic. You can get around very easily. There's no traffic in terms of, access to golf courses and infrastructure around that area. It's all within sort of 5-10 minute drive. Airport's just down the road. So it's almost got that regional country vibe going about that particular area. And if you like the hot weather, you've got to watch for sort of cyclones, and it is quite, in terms of, you've got to make sure that your insurance is on the building.
Of course.
So that's a big one. And, they've almost got to be cyclone proof. So the units that we're buying, you've got to make sure that they comply with minimum standards for you to insure them. Because if they're not, then if anything goes wrong, there can be some pretty significant damage, or you actually can't insure those particular buildings, or your insurance won't pay out.
Right. So you need to figure that out, obviously, before.
Yeah. So when we're doing our due diligence and the buying team, if we've got to go through a very stringent process, and a lot of them are failing because they're not up to standard. And one of the big things for Darwin, make sure it's insurable. We call them bomb shelters at the moment. They've got to be cyclone proof type assets. So if we do have significant storm, they can weather that through.
Oh, that's because there's not something I think about in Melbourne, obviously.
Well, Brisbane, Cairns, Queensland, it's quite a common issue with weather conditions and changing them. Perth's not much of an issue. Adelaide's not much of an issue, but Darwin and Queensland, big issue.
So Darwin, what did you say, 150,000?
138,000.
138,000 people. I mean, that's not a massive population.
Yep.
So how does that compare to similar cities or regional towns? Would Darwin have a higher investment because it's a capital city compared to similar sized towns elsewhere?
Yeah. Well, it's a great question. We look at areas and regionals that have a population of at least 100,000 people. So if anything goes wrong in that market, you've got the ability to liquidate it. And you can see the average days on market is, for houses, it's 51 days, and for units, it's 56 days. So as long as you've got the ability to liquidate it, but it's very, very similar to a regional. So a Ballarat, a Wollongong, a Newcastle, it's got very similar sort of metrics. It's not quite, I wouldn't call Darwin a capital city. I'd probably call it more of a regional or secondary capital city, almost in line with a Canberra or a Darwin. But as I said, Darwin is not a market that we're investing for the long term. We've got very much a trading sort of position on that particular area. And when it does the growth that we need it to, then we'll trade it and move on to something else.
Fascinating. That's definitely, Darwin is often the forgotten capital, as you say.
It is, yep.
Obviously, sometimes I forget Tasmania exists as well. Apologies to our Tasmania listeners. Thanks for reminding us. So that is very interesting, and looks like there's some good times ahead for Darwin.
And we'll finish it up there. And thanks to Property for Doctors and Property Investing for Doctors on our Facebook group.
Yeah, so if you're a doctor and you're on Facebook, come and join my group, Property Investing for Doctors. We do talk a lot about property investing, give advice. There's a lot of interesting topics on there. Or if you just want to ask and chat. And Phil was on there as well, so answer any questions.
Yeah, so any of our research, we're more than happy to share that with the group. And we love doctors, love helping them. So look forward to helping them more and educating them more.
Awesome.